Thanks to the team TAXO, Manojji, and all my colleagues here who are participating in this masterclass being organized by the team TAXO and giving me this opportunity to participate and share my thoughts around the Finance Bill 2023. My dear friends, as you are aware that when we are speaking about the indirect taxes, in the indirect taxes regime, as the majority of the changes are coming through the various GST council. So practically it is what is happening that every month or in the next 45 days, there is a many changes which are coming through the GST council. So in a lighter way, we used to say that for the indirect taxes, it is the more than 8 times budget in a year. But nevertheless, you are aware that when we are talking about the indirect taxes and specifically about the GST Council brought in the various changes which can be implemented through the notification, circulars, or they are the policy related issues. But when we are talking about the amendment in the Act, certainly you have to have the finance bill through which only the amendment in the Acts can be achieved. So my dear friend, all the amendments which are being notified at the one or the other occasion in the 47th, 48th GST Council meeting, or even otherwise before that, many of those changes are now will see the light of the day because they are getting implemented through this Finance Bill 2023. So my dear friend, I will be discussing you the 17 such changes which are introduced through this Finance Bill 2023. It's a small budget as far as the indirect taxes are concerned, so it will not take much time of yours, and I believe that we will be able to complete the deliberation in around 40 minutes time, which is being allocated to me. My dear friend, the first category of change is in relation to the composition scheme. You are aware that when I follow the section 10 of the CGST Act, meaning thereby I am into the composition scheme because my turnover is below the threshold limit which is being prescribed for the composition scheme. So I opted for the composition scheme. But I want to use the service of the e-commerce operator, which is very prevalent in these days time. And I want to do some interstate taxable supply as well through the e-commerce operator. Now that is prohibited under the law, under the section 10 itself, that is the section 10 subsection 2 clause D, which says that the composition dealer will be a person who is not engaged in the supply of goods through an electronic operator is there. Now, my dear friend, as the representations were there that the composition scheme dealer should be allowed to do the dealing with the e-commerce operator as well. 47th GST Council meeting announced that from the 1st of January 2023, they will allow the composition dealer to do the business with the e-commerce operator. But in the 48th GST Council meeting, the government postponed that date of 1st of January to 1st of October 2023, that by which by this date we will allow the e-commerce operator to deal with the composition dealer as well. My dear friend, the enabling provisions were required, and now there is an amendment under section 10 subsection 2 clause D of the CGST Act 2017 which deals with the composition dealer, and they allow the composition dealer from a prospective date that okay, that date will be announced after the act bill will become the act, that they will be allowed to deal with the e-commerce operator. But my dear friend, I just wish to clarify each one of you. When I'm speaking this, I'm just intimating and giving a caution to all my composition dealer that it will be available only to the composition dealer who are dealing in the goods, not in the services. So if you are a composition dealer, you are dealing in the goods, so maybe from the 1st of October 2023, because it will take time to implement the law, then the composition dealer dealing in the goods will be allowed to do the interstate taxable supply using the e-commerce platforms. So my dear friend, this will be a welcome change for the composition dealer, that they will be also in a position to deal with the mainstream of the recent scenario when the buyers are using e-commerce platforms for a substantial amount of their buyings. Now, my dear friend, coming to the next change, which is in relation to the Rule 42 vis-a-vis Section 17 subsection 2. My dear friend, you are aware that when I am dealing in the taxable and the exempted supply, then I have to claim the credit in a ratio of a taxable supply vis-a-vis the total supply. Meaning thereby, say for example, my turnover is rupees 1 crore and 70 lakh rupees is taxable, 30 lakh is exempted. In that case, as per the section 17(2) and the read with the rule 42, I am eligible to claim only the 70% credit out of the total credit available to me. So for example, if the total credit available is 5 lakhs rupees, in the ratio of a 70/100, because my 70 lakhs is taxable, 30 lakh is exempted, I will be eligible to claim a credit of 70% of rupees 5 lakhs, that is 3,50,000. My dear friend, now while dealing with this kind of a proposition, they in the section 17(2) and 17(3), they define the various activity that okay, these activity will be called as exempted activity as well. For example, just to share with you, I deliberated on the earlier occasion that say for example, I am an advocate and I am rendering certain services, and the buyer is paying the tax under the reverse charge mechanism. In that case, for the advocate, this activity will be a exempted supply. This activity will be an exempted supply for the advocate, and the advocate will not be able to claim the credit of any services used to provide that kind of a service. Similarly, in case of I am dealing in the securities. So if I have a selling and purchase of these shares in the security market, in that case, the 1% of the sale value is always being treated as an exempted supply, and accordingly, I have to develop the ratio. My dear friend, in that particular category, that which activity will be called as exempted, which activity will be called as taxable, now they have inserted a new clause, and that clause will fall through the Schedule 3, and which talks about the supply of the warehouse goods before final consumption, before the home consumption. So what the law is saying, that in case the activity is relation to the supply of the warehouse goods to any person before the home consumption, in that case, that activity will also fall under the exempted activity. Meaning thereby, it's like a high C sales. So I'm not talking about the high C sales right now. Just to clarify you, I'm not discussing about the high C sale. I'm saying that similarly to the high C sales, if there are the import of goods, they are being warehoused, and then before clearance for the home consumption, if those warehouse goods are being supplied to any other person, in that case, that activity doesn't attract the GST. But that activity, for the purpose of the calculation of the ratio, will be treated as exempted supply. But my dear friend, whether the entire amount will be treated as exempted supply, or like a share in transaction in security only 1%, that amount will be prescribed in due course of time. So my dear friend, now I just wish to give you an overview again, that in case you have, say for example, you have a 5 crore rupees taxable activity, and then you are selling certain warehouse goods before the home consumption to any other person, and that amounts to 3 crore rupees. Then out of that 3 crore, let us assume that they will say 5% will be exempted activity. In that case, 5% of the 3 crore, that is 15 lakhs, will be treated as a exempted supply. So my turnover, that the taxable turnover vis-a-vis the exempted turnover, I will be eligible to claim the credit in that ratio. So my dear friend, it's very important that we are aware about this particular amendment which is being introduced. So I just remind, the supply of warehouse goods to any person before clearance for home consumption. Now my dear friend, coming to the next change, and the next change in relation to the CSR expenditure. My dear friend, you are aware that we have a section called section 17 subsection 5, which deals with the block credit. That okay, if you are buying the motor vehicle, you are taking the food and beverages service, you are taking the health care, this health insurance, or a rent a cab, the credit is not available to you. Why? Because that is the block credit as defined under section 17 subsection 5. So irrespective of this fact that it is being used for the business, and you have all the invoices available, you pay to the supplier, within 180 days, and everything you have completed, still there are the certain services which are specifically blocked, that okay, the credit of these services, these expenditure will not be available to you. Now, my dear friend, there is another expenditure called the CSR expenditure, which is mandated under Section 135 of the Companies Act. Now, my dear friend, if your turnover is to a threshold limit, you are having a net worth of this much of amount, you have to incur the 2% of your net profit as a appropriation of the net profit for the CSR expenditure, that is the corporate social responsibility expenditure. Now, my dear friend, there was a confusion whether the CSR expenditure credit, the credit on the CSR expenditure will be available to you as a eligible input tax credit or not. My dear friend, the issue was there in the service tax regime also and in the GST regime as well. You are aware that there are the many judgments which favor the SSC that the credit on the CSR expenditure will be available. Likewise, there is an advance ruling as well, recent, which says that the credit on the CSR expenditure will be available. But at the same time, there were the contrary judgment which were saying that the CSR expenditure is not an eligible expenditure, and that falls under the block credit and the credit will not be available. But now, my dear friends, as per this new amendment which is being brought in by the Finance Bill 2023, the CSR expenditure will also be called as a block credit, and the expenditure. So say, for example, you have a CSR expenditure of rupees 2 crores and 36 lakhs rupees you also paid for the GST. Now, my dear friend, this 36 lakhs rupees credit will not be available because that will be called as a block credit under Section 17 subsection 5. So we have to see that this credit will also be a block credit. But my dear friend, I just wish to share with you one thought around this, that as you are aware that if the law will say that from today it will be a disallowed expenditure, it will not be a valid credit, it will not be a eligible credit, it will be a block credit. In that case, the provision will be applicable from the day one, from the day when it will be notified. If it is retrospective, then the matter is different. But from the 1st of July 2017 till the notification will not come, there will always be a debate whether for that period the credit will be available or not. And as per the jurisprudence which we are following in the normal parlance of the indirect taxes, that if the clarifications came today, if the notifications came today, meaning thereby prior to that it was allowed, now it is being subject to that it will not be allowed. So you can handle your litigation, handle your arguments accordingly based on the notification which will be issued in the times to come. Now, my dear friend, the next amendment is in relation to the registration. You are aware that sections 22 and 24 deals with the registration and the certain mandatory registration requirement as well. But section 23 gives the immunity to certain class of person that, okay, you are not required to take the registration. But at times, since the contradictory provisions were there, so section 24 was doing a superseding effect of the section 23, meaning thereby even if you are falling under that class of section 23, still as per the section 24, you have to take the registration because that was superseding the section 23. But now, my dear friend, looking into the scenario that, okay, this is a contrary kind of a situation which is happening. Now they have given an edge to the section 23 by adding the word in the section 23 that is notwithstanding anything contrary to the contrary contained in subsection 1 of the section 22 or section 24, meaning thereby the section 23 will have the overriding effect on the section 22 and 24, meaning thereby if you are falling in that particular class of person on which the registration is not compulsory, then nobody can tell you to take the registration. Now, which are the two classes, which you should also know that, okay, which are the two classes in the section 23 which are being prescribed already who are not supposed to take the registration. Number one, that in case your entire activity is an exempted activity. So say, for example, I have the business of a renting of a residential property for use as residence. I'm aware that then you are giving to the business as a business class or something like that. I'm not saying that. Say, for example, I have the 10 houses and I have given all those houses to the, say, 20 tenants and who are using that property for an individual purpose, for a residential purpose. In that case, my turnover may be 100 lakhs, maybe a 1 crore or a 50 lakhs or something like that. But since my entire activity is an exempted activity, I'm not supposed to take the registration. as per the section 23. So if my entire activity is exempted, I am not required to take the registration as given in the section 23. The second category is about the agriculturist to the extent of the supply of produce out of cultivation of lands, meaning thereby that in case I am an agriculturist, my total turnover is 50 lakhs rupees from the agriculture production and 2 lakhs rupees is the renting of a commercial property. In that case, that 50 lakhs rupees will not be counted for the purpose of the threshold limit as given in the section 23. So my dear friend, what I am trying to convey you that for these two category of person, the registration was not compulsory, but because of the overriding effect of section 24 on the 23, the problem was that thus they were taking the registration even for the RCM purpose. But now, my dear friend, since the section 23 will have the overriding effect that, okay, for these two class of person, you are not supposed to take the registration irrespective of any situation. That will help a lot to the person who are dealing in the exclusively exempted activity. Now, my dear friend, there will be a question in your mind, or even that will be litigated in the times to come, that in case, say for example, the same guy which I am talking about, that having the income only from the renting of a residential property for the purpose of residence, say for example, his total income is 50 lakhs rupees, but by chance he has to encounter a legal case and appointed an advocate to appear on his behalf. Now, what will happen? Say for example, the advocate will charge 1 lakh rupees as a fee. Now on that, 18,000 rupees is the tax which is applicable on the reverse charge mechanism, and for that the person has to take the registration under section 24. So earlier what was happening, that the person has to take the registration and pay the tax to the government exchequer under the reverse charge mechanism. But now, since under section 23 it will have an overriding effect on the section 24, whether that person will have to take the registration and pay the tax under RCM or not will be a matter of litigation in the times to come, will be a matter of interpretation in the times to come, which I believe that we will be dealing in the next few sessions. Now, my dear friend, after this fourth change, which I shared with you, I came to the sunset clause provisions, which are being introduced under the GST regime. You are aware, my dear friends, that we are filing the various returns under the GST. Section 37 deals with the GSTR1, that is the sales return, which we used to call. We have a section 39 which deals with the GSTR3B. Then we have a section 44 which is dealing with the annual return. And then finally we have a section 52 which is dealing with the TCS related return. Now, my dear friend, for all those cases, the due dates are there on at time to time. There is on the basis of certain intervals, there are the various due dates. For example, you have to file the GSTR 3B on the 20th of every month. Now, my dear friend, if you fail to do so, then you can file your GSTR 1, 3B, 40 annual return or the TCS return at any point of time, even after 5 years. Certainly, you have to pay the interest and penalty, whichever is applicable. Interest is not applicable, the penalty provisions or the late fees is there, so you have to pay that. So you are eligible, you are free to file your late returns without any kind of a sunset clause. Though in the income tax provisions now you have a sunset clause that by after that particular period you can't file the belated return. Now, my dear friend, under the GST regime also they have brought in the provisions similar to the income tax, that there will be a sunset clause, meaning thereby that if the due date for a particular return, say for example the 20th Feb is the due date return for a 3B, the 20th of Feb 2023, in that case the 3-year sunset clause will be there, meaning thereby by the Feb 2026, after that 20th Feb 2026, you will not be able to file that return which relates to the 2023 20th of Feb, meaning thereby every return will have a sunset clause, whether it is a GSTR 1, it is a GSTR 3B, it is the annual return, or it is the, you will say this return under section 52. All will have a sunset clause, and by after that, you will not be able to file your return, which is as per the provisions. Now, my dear friend, they also given a relief that, okay, in case the government wish to extend this 3-year period to for a particular class of person, then as per the by virtue of some kind of a notification or a order, they can do so as well. Now, my dear friend, coming to the next category of change, and very importantly, it should be heard, it should be read by every e-commerce operator and the consultants who are dealing with the e-commerce operator. My dear friend, there is a new subsection 1B under the section 122. So what I'm talking about, the section 122 1B, a new section has been inserted for the imposing the penalty for the e-commerce operator, which I am going to dealt upon. My dear friend, you are aware that in case of an e-commerce operator, what you are doing, you are actually is a platform where the buyer and sellers are coming and they are buying certain things. The seller and the sellers are supplying using the e-commerce platform to the buyer. Now the sellers are the different guys who are the sellers maybe belongs to one state or the another state, or belongs to one category or the another category. Now, my dear friend, similarly, we have discussed just before that the e-commerce operator can't deal with the composition dealer because the composition dealers are not subject to use the platform of the e-commerce operator. Now, my dear friend, under section 122, they imposed a penalty of rupees 10,000 or the amount of tax whichever is higher to the e-commerce operator if they commit three following mistakes. Number one, that if they are using the e-commerce platform, providing the facilitation of the e-commerce platform to an unregistered person. So say for example, Atul Gupta is an unregistered person, my turnover is only rupees 10 lakh and I want to sell my goods through the e-commerce platform. In that case, that is not allowed. And if the e-commerce operator will allow, then there will be a penalty of rupees 10,000 plus or the amount of tax involved, whichever is higher. Meaning thereby, if the amount is 1,80,000, in that case, the penalty amount will be 1,80,000 rupees. So my dear friend, if the goods are, say for example, I'm engaging with the e-commerce operator is engaging with the unregistered dealer. Unregistered dealer is selling the 10 lakh rupees goods through the e-commerce operator. The goods falling under the classification of 18%. In that case, the amount of tax which should have been charged is 1,80,000 rupees, which is not being charged because he is an unregistered dealer. In that case, what will happen? The e-commerce operator will be liable for a penalty of 10,000 rupees or the amount of tax whichever is higher, meaning thereby 1,80,000. Similarly, if the e-commerce operator will engage himself with the composition dealer, though the composition dealer will be allowed in the times to come, but right now, when the composition dealers are not allowed, number one. Number two, the composition dealer related to service will never be allowed. So in case the e-commerce operator is engaging a composition dealer of the goods or service in the present scenario, in that case also the e-commerce operator will be liable for a penalty of 10,000 rupees or the amount of tax whichever is higher. And the third one, that when the composition dealer is dealing with the exempted supplier. So say for example, I am dealing in a activity, I am dealing in a goods which are exempted under the GST regime and I am using the e-commerce operator, then it is allowed. But the e-commerce operator, while filing his GSTR 8, has to give the details of the detail of the supply made by the exempted dealer. So my dear friend, what the law is saying, that if you are not giving the details of such supply, in that case also the e-commerce operator will be liable for a penalty which is required under which is, as I mentioned you, under section 122 subsection 1B. Now my dear friend, coming to the next category of change, which is the decriminalization of the offenses. My dear friend, you are aware that the GST have a lot of prosecution provision under section 132 and then compounding under section 138. My dear friend, under section 132, there are the manius clauses which defines the offenses which attract the prosecution even. Now, my dear friend, under this particular Finance Bill 2023, as announced in the 48th GST Council meeting, now the three type of offenses are getting decriminalized, meaning thereby for these offenses, there will not be any prosecution provision. Number one, that the obstruct or prevent any officer in the discharge of his duty under this act. So meaning thereby, if say for example, there is an allegation on the SSC that you are obstructing the officer in performing his duty, in that case, it will be an offense but it will not be an offense which will attract the prosecution provision. Number two, the tampers with or destroy any material evidence or document. So if there is an allegation on the SSC that you tampers or destroy any material evidence, in that case also there will be a decriminalization. And number three, the fail to supply any information which he is required to supply under this act or the rules made there under, or supply the false information. So my dear friend, again, this is the third and very, very important. So what I'm trying to convey you, that at times there are the allegation on the SSC that, okay, you tampered the evidences, you providing the false statement, false records, or you are obstructing the officer to perform his duty. And in that case, if the allegations are there, then the SSCs are facing a lot of kind of a challenges that, okay, how to deal with. But now a welcome change is there from the ministry, from the finance ministry, that they brought in this finance bill 2023 to decriminalize the offenses under section 132. Exactly the clause of the 132 subclause G, J and K of subsection 1 has been omitted from the section 132, meaning thereby for these three clause will not be there in the act now, meaning thereby there will not be a decriminalization on this particular part. Now my dear friend, further to this, there is another amendment in the section 132. Now my dear friends, when I am saying this section 132 and then 138, reading together, that there were the two type of offenses, there were the two category of offenses which we were handling. Number one, that if the allegation on the evasion of tax is there, and the allegation of evasion of tax may be for many various reasons. We have just prepared a note for all these offenses from A to F, and which you will get in a shape of a note from the team TAXO. That wherein I will say that there are the two category of offenses are there, classifications are there. If the allegation of evasion is less than rupees 5 crore, from 1 crore to 5 crore, then there was a offense which was bailable offense. Whereas if the allegation of evasion of tax is more than 5 crore rupees, then the offense was a non-bailable offense. You are aware that if the offense is a bailable offense, meaning thereby even the police officer or the department authorized representative can also give the bail. Whereas in case it is a non-bailable offense, then you have to go to the court only to get the bail. Now, my dear friends, there are the various offenses which are being defined under the section that for the evasion of tax. Say, for example, they say that the supply of any goods or service or both without issue an invoice or bill without supply of goods or service, avail input tax credit using the invoice or bill which are fraudulent, and like this. Now, my dear friend, under this particular amendment, they try to give a relief to the SSCs by increasing the threshold for this no bailable offense. But as I mentioned you, that if the evasion of tax is between 1 crore to 5 crore, it is a bailable. If the amount is more than 5 crore rupees, it is a non-bailable. Now, my dear friends, henceforth, the threshold of 1 crore will be increased to 2 crore of rupees. Meaning thereby, if the allegation to evade the tax is from 2 crore to 5 crore, then it will be a bailable. And if the amount is more than 5 crore, it will be non-bailable. But so, what is the meaning thereby? That the amount of allegation for evasion of tax up to rupees 2 crore will not require a cognizable or a non-cognizable offense kind of a category. Meaning thereby that there will be a relief to the SSC and he will be able to pursue his case, litigate his case without attracting the prosecution provision. My dear friend, as I just wish to draw your attention on the clause B of section 132 subsection 1 clause B, which talks about the fake invoice, that okay, issue any invoice or bill without supply of goods. My dear friend, in case there is this allegation is there, then the threshold will remain the same which was earlier. So if the SSC is facing an allegation of the evasion of tax on account of issue an invoice without supply of goods, then the threshold will remain 1 crore to 5 crore. Meaning thereby, if the amount is more than 1 crore, then the person can be arrested, but it will be a bailable offense. So my dear friend, it's very, very important that one has to understand that, okay, what all the prosecution provisions are there, so that somebody should be aware of that, okay, what will be the penal action or the prosecution provisions will be there in case something wrong is being committed. My dear friend, then coming to the next category of change, and which relates to the provision which I dealt upon just before. My dear friend, I discussed with you when I was discussing about the ITC on the warehouse goods. Now, where is that provision? You will ask me a question, okay, that from where that particular provision will come. That, okay, if I am doing a supply of the warehouse goods before the home consumption, it will be called as an exempted supply and will attract the reversal of the credit. Now, where is being defined that that is the warehouse goods? So, my dear friend, just to share with you that the Schedule 3, you are aware under the GST, Section 7 deals with the supply of supply. And in that, there are the 3 schedules which are attached to the Section 7. Number 1, that the Section Schedule 1, which deals with the supply without consideration. Number 2, Schedule 2, which defines what is the taxable supply of goods, what is supply of service. And Schedule 3, which practically says that the following activity will neither be treated as supply of goods nor supply of service. Meaning thereby, in a layman language, that is a negative list which is being given under the CGST Act. Now, my dear friend, as you are aware that there are the 2 amendments into that you are aware that in 2019, they defined the high C sales that will be falling under the Schedule 3. Meaning thereby, under the clause 7 of the Schedule 3, if your activity is a high C sales, then it will not be subject to GST because that is neither being treated as supply of goods nor supply of service. So there was a litigation that from 1st of July 2017 to Feb 2019, when it was being defined as a high C sales, what will happen? So there were the litigation going on. The department was claiming that, okay, no, prior to that it was taxable. So my dear friend, through this Finance Bill 2023, they amended the provision with a retrospective effect that the high C sales was not a supply of goods, not a supply of service, was not attracting the GST at all from the day 1. That is from the 1st of July 2017. It was not Feb 2019. It was from the 1st of July 2017. And by virtue of that, there should not be any demand on the SSC. But at the same time, they mentioned that in case, because of this clarification which we are giving today now, if any refund will arise, then that will not be entertained at all. So meaning thereby that if there is any litigation going on, the department is asking you that, okay, it is the subject to GST because the notification came from the Feb 2019. No, it is not the case. The clarification came in 2019. No, it will not be a case. It will be treated as neither supply of goods nor supply of service from the 1st of July 2017 itself. Now, my dear friend, the second change which came into the Schedule 3 is the insertion of the new clause which I mentioned you in the beginning. That is the clause 8A. Meaning thereby the clause 8A, the new clause which is there, that is the supply of the warehouse goods to any person before clearance for the home consumption. Now, my dear friend, there is a new category of the activity which is neither being treated as a supply of goods nor supply of service. That is the warehouse goods before the final home consumption. So if you are supplying the warehouse goods before the final home consumption, that will not be treated as a supply at all. But for the purpose of the Section 17.2, 17.3, for the purpose of the Rule 42, that will be treated as exempted supply. But what portion will be treated as exempted supply? As I mentioned you in the transaction in security, 1% value is being taken. Likewise, for this also, the rules or the procedure will prescribe that, okay, which value will be taken for the purpose of this exemption calculation, for the reversal calculation. So, my dear friend, coming to the last few category of changes, and the next one is in the OIDAR services, the Online Information and Data Access and Retrieval Service. My dear friend, you are aware that, say for example, the online information data access, what is mean? Say for example, I developed a portal wherein I put certain journals or some valuable research material which you are downloading from the another jurisdiction. In that case, that is called online information and data access and retrieval service. So whatever amount I am charging, say for example, Manoj Kapoor ji is in India, I am based in Paris, and he is downloading certain material from my portal by paying me say $100. In that case, that this is called OIDAR services. And in this particular case, the GST was applicable by the following way. Number one, that if I am based in Paris and he is based in India, and he is a non-commercial organization, say for example, educational institute is there, he is a non-commercial entity is there, he is not dealing in the industry, business, commerce or profession, is a non-commercial entity. In that case, what was there, that I have to take the registration in India, though I am located outside India, but I have to take the registration from a representative SSC in India, and then I have to charge and pay the tax to the government exchequer. Whereas in case the Manoj Kapoor ji is a business, is a registered person with the GST department, in that case, he will be paying the GST under the reverse charge mechanism. Now, my dear friend, through this amendment in the Finance Bill 2023, they omitted the word the government, local authority, governmental authority, or an individual not registered, or even in relation to any purpose other than commerce, industry, or business or profession. Meaning thereby, now irrespective of the nature of the Manoj Kapoor ji organization, whether he is a registered or not, he is a commercial or not a commercial, what will happen that I have to take the registration. I am based in overseas location. I am providing the OIDR services. I have to take the registration, and then I have to charge and pay the tax to the government exchequer. So, my dear friend, this is a very, very important change that it will come. That now there will not be any requirement on Manoj ji to register and pay the tax under the reverse charge mechanism. My dear friend, similar to this, there is another amendment in the OIDR services. So, OIDR means the online information and data access retrieval service. When we are doing online information, meaning thereby it will be more or less automatic, and it will require a very less human intervention. So what was happening, that this particular word, that it will be automatic and the less human intervention will be required, was creating a lot of litigation, because somebody was saying, say for example, I am rendering a coaching service from Germany to India. Now it will require a lot of human intervention, and because of this, it will not fall under the OIDR services. So no taxability will not be there. Now, my dear friend, this is again a very subjectivity is involved into this. And that's why the government has removed the word, the essentially automated and involving minimum human intervention from this definition of the OIDAR. Meaning thereby that I will not concern that, okay, how much is the human intervention required or how much is the automation is required. If the activity is the online information and data access and retrieval, it will be subject to GST, whether there is a 5% human intervention or there is a 95% human intervention, that hardly matters to the taxability of the activity. My dear friend, then there is another change which I wish to share with you, which is talking about the transportation of goods where the place of supply is outside India. My dear friend, Manoj Kapoor ji is based in Delhi. I am also a travel agent. I am an air cargo agent, which is also based in Delhi. He wants to sell his goods to Singapore, and that's why he is using my service. Now the supply of goods which he is doing, I am rendering a transportation of goods services to him by air. Now what is happening, that since the place of supply is Singapore, the destination of the supply is Singapore, the place of supply will also be Singapore. In that case, there were two questions: whether this activity will attract GST, and if it will attract the GST, because the Manoj Kapoor ji is registered in Delhi, the place of supply is falling in Singapore, whether he will be eligible to claim the credit of the same or not. So, my dear friend, there was a circular which is being issued by the department after the 48 GST Council meeting as well. But now, to give a legal backing to the provision, under section 12 subsection 8 of the IGST Act, they amended the provision and inserted that this activity will be, though the place of supply will be falling the outside India, this activity will attract the GST, and Atul has to charge IGST from Manoj, though we are belongs to the same state, but it will be subject to IGST, and in that case, the Manoj will be eligible to claim the credit of the same as well. So, my dear friend, though the place of supply, I will say the foreign territory. I will say the foreign territory. We have a code 96. I will say the foreign territory, place of supply, foreign territory. I will be charging the IGST. The place of supply will be Singapore, but still the Manoj ji, who is registered in Delhi, will be eligible to claim the credit because this particular amendment is being introduced. But at the same time, it is very, very important that it gives a message that whether the place of supply falling under your jurisdiction will be important or not a important condition to claim the ITC in the other for the other services as well will be a question which will require a lot of introspection among the legal luminaries. My dear friend, coming to the next change, which talks about the insertion of a new section 158A. My dear friend, the new section 158A is now being introduced, getting introduced under the CGST Act, which talks about that the sharing of the information or the detail furnished by the taxable person on the GST portal with such other system as may be notified by the government. So what government is saying that I will be notifying certain class of agencies to whom I wish to share your information. So you are sharing your information while taking the registration. You are sharing your information while you are filing your submitting your e-invoicing or your returns. So if the government wish that okay, I want to use this information, but I will do that, I will take certain kind of mandate from the SSC that okay, whether I can share this information or not. So they will be notifying certain agency to whom this information will be shared for the various governance purpose. So my dear friend, or the data mining purpose. So my dear friend, through the section 158A, that the government is going to take the empowerment to share the data which is going to be submitted by the SSC on the GST common portal, may it be for the registration, filing of invoices, uploading of invoice or filing of return. Now my dear friend, coming to the last two changes. The one change is in relation to the 180 days requirement. You are aware that we have a second and the third proviso of the section 16, which talks about that you have to pay to the supplier within 180 days to retain the credit. So say for example, I have taken certain services from a supplier and I claim the credit on the same as well. So as per the proviso, which is there under section 16, I have to pay to the supplier within 180 days to continue enjoy the credit which I claimed earlier. Otherwise, I have to reverse the credit to the government exchequer along with the interest. Now, my dear friend, as you are aware that when we are reading this section 16 subsection, this proviso, there was a word. There was the two important changes which are being introduced. The first one was that under this proviso, it was being mentioned that if the SSC fails to do so, then an amount equal to the input tax credit availed by the recipient shall be added to his output liability along with the interest thereon. So my dear friend, what the law was saying that okay, because the matching concept was there, so if the SSC will not pay, the buyer will not pay to the supplier within 180 days, automatically the amount will be added to his output liability. But now the matching concept is not there. They have already removed the provision related to GSTR2 and so on. So meaning thereby this automatic upload of the liability will not be possible. So my dear friend, they omitted that word, meaning thereby it will be the duty of the SSC to calculate that whether I am paying within 180 days or not. If you are not paying within 180 days, you have to suo motu reverse the credit along with the interest, which will be continue to be there as it was there. So it will be practically a cosmetic change rather than any impactful change. But there is a impactful change as well, which also settles certain controversies. My dear friend, in the next proviso, the third proviso, they mentioned that the provided also that the recipient shall be entitled to avail the credit of the input tax on payment made by him of the amount towards the value of supply. So the payment made by him. Now, my dear friends, the supplier has to make the payment. Okay, the supplier has to made the payment. Now, whether the supplier is paying directly to the supplier or it is going through a book entry or something like that, or he has actually received or not, because you have made the payment, but the buyer is not encashing your check. So there was a lot of, I will say, the interpretational issue. The different permutation and combinations were roaming around, and that's why to settle those, they have removed the word made by him and replaced the word with the word the to the supplier. Now meaning thereby that the credit will be available, that you can retain the credit, the recipient can retain the credit or entitled to avail the credit of the input tax on the payment made to the supplier. So unless and until you are not making the payment to the supplier within 180 days, the credit you cannot retain which was there. My dear friend, the last change which I just wish to share with you, that you are aware when you are filing the refund claim under section 54 subsection 6. So when you are filing the refund claim, that at times there is a I will say the section 56 I'm talking about rather than section 54, that they were talking about the interest on the refund claims. So there are the certain conditions, restrictions are there, which getting imposed, and the assessees are not getting the refund and the interest at times. But now, my dear friend, the law is getting amended in such a way that the government is going to prescribe certain, I will say, the rules, or I will say the certain parameters, by virtue of that the interest will be made available to the assessee through following that particular rule. So it will not be available on a subjectivity. It will be based on the rules that, okay, how the interest will be calculated for the refund claims under section 56. So my dear friend, this will be a welcome change, because that will reduce a lot of subjectivity, and the assessees will be getting their due interest as per the rules prescribed under the CGST Act. So my dear friend, this was all from my side. I believe that there may be few questions. I don't find any questions from my colleagues here. So I believe that I try to clarify each and every aspect in a very lucid and the layman language, along with the various provisions which are associated with this particular Finance Bill 2023. With this, I complete my talk and hand over the mic to Manoj Kapoor ji for his concluding remarks. And once again, thanks to the team TAXO for giving me this opportunity. I got this opportunity in the last few days twice to speak on the budget related provisions. Thank you, Manoj ji.
Yeah, thank you, Atul ji, for the wonderful deliberation on the analysis of the union budget. Friends, we also, our team also prepare one beautiful document or analysis on the union budget 2023, which is available in our taxo.online homepage, what's due section. If you are interested, you want to read the complete analysis, you can download it, and you can have the copy for you for the future reference. And thank you all for to attending this program, and definitely we will be next time in the new program. Once again, thank you, Atul ji.
Thank you, Manoj ji.